I want to go through the 4 most important financial metrics for buy-to-lets used to buy property investors. I used to get confused with all the terms that were out there: gross yield, net yield, cash flow, return on investment. I will explain what it is and how it is calculated using one of the projects we've completed in Brixton, gross yield. The gross yield is the yearly rent divided by the value of the property. The rent per annum, £22,200. The value of the apartment is £320,000, giving us a gross yield of 6.93%. The advantages of using the gross yield is that it is a good indicator to compare different projects in the same area. However, the gross yield can be misleading in the sense that it doesn't take into account all the costs in managing that property. Net yield, the net after all costs divided by the value of the property. Example, total rent per annum for our property in Brixton is £22,000. Total annual expenses equal £15,984.72, resulting in a net profit of £6,215.28. That gives us a net yield of 1.94%. The net yield seems low, but this is in London. Also, because we manage the property ourselves using portals such as OpenRent, the cost of management is actually a fraction of the cost stated here. The advantage of the net yield is that it gives you a more accurate appraisal of the actual return you are earning. Cash flow. This is simply the rent received less all expenses you have incurred. So for example, it will be the rent less your mortgage, management fees, service charge if it's a flat, any repairs and maintenance. This is the actual cash the property is generating on a monthly basis. Going back to our Brixton flat, total annual expenses of £15,984.72. That results in a cash flow per annum of £6,215.28. This is a newly refurbished apartment, so we wouldn't expect many maintenance issues, and we also manage the apartment ourselves. The cost is quite high. Return on investment, ROI. This is the most important metric and one that is overlooked time and time again. ROI is simply the annual profit, income minus all your expenses, divided by the cash left in. ROI is usually calculated by taking your profit and dividing this by the cash someone has contributed. However, with B4R, the correct metric to use is the cash left in, because the initial money we invested is reduced upon us refinancing the property onto a buy-to-let mortgage once we have added significant amounts of value. Cash flow per annum in relation to our Brixton property is £6,215.28. The money left in was £36,735.16, giving an ROI of 16.91%. After the 5-year point, we will refinance this apartment, which should release some funds which will allow us to buy another property or even pay ourselves a dividend. I often get asked, what ROI should I aim for and what ROI makes a good deal? It's a really difficult question to answer. It depends on what your goals are and what you are trying to achieve. For example, the metrics above might not appeal to someone outside of London, as the yield, cash flow and money left in doesn't seem attractive. If you compare this to a normal buy-to-let investor in London, then these returns suddenly seem very appealing. We don't look at these financial metrics in isolation, but together with other non-financial metrics such as prospects of capital appreciation in the area, rental levels, demand. This apartment in Brixton was a 7-minute walk away from Brixton Underground Station, an area which was receiving a lot of investment and interest. Rental levels were strong in the area and demand was also very strong. This helps us to build up an overall picture of the investment, as otherwise the numbers might look great, but the area might not be great in terms of prospects in relation to capital appreciation, rental levels, and demand might also be on the decline. If you like this video, please smash that like button and hit subscribe so that you get notified when I release another video. Make sure you are subscribed, as I will pick a subscriber at random and have a 10-minute call with you to see how I can help you on your property investing journey. Please check out my personal website, ravinderaudio.com, where I have lots of free videos on property investing and serviced accommodation. Thanks for watching and see you on the next video. Bye.